What does the CPI print bring to the table in terms of new information? What do you expect from here?
Well, if you remember, you had me on the CPI print a month ago, and you had a much stronger than expected CPI. The market was getting crushed in the morning, and I was on and I said, look, I think October will finish up, and I think we're going to get a rally through year end. So going into this, and which is obviously what happened, going into this CPI print, I sort of had the same view of, well, if it could go up 2.6% off of a really horrible one, if you get something that looks a little bit better, and the nice thing yesterday was you got the whole BTX, they're not going to get bailed out. The market was only down about 30 or 40 bips in the morning, because obviously the Republicans did not quite as well as people thought, but still, you got a split government, which is great for the opportunity for a stock rally. But the BTX situation, FTX situation obviously really helped, drive the market to new lows, which gave you a really great setup into the CPI print today. So for us, we're having one of the best days of the year. We're up the most we've been for the year with today, if the market were to end right now.
Dan,
and we think it's going to continue.
How influential do you think the FTX situation and crypto movements in general are on the broader market? You seem to suggest that you think it has an influence.
Oh, it had a huge influence, because if you think about it, John, as I said, the market was only down about 30 or 40 bips in the morning before that FTX situation really got rolling. And then you have to worry about, something much bigger, right? I mean, they talked about they have an $8 billion cash hole. And so the thought in the back of my mind, and I have to admit, I was thinking about is, do I really want to get that much longer into the CPI print? Because what if tomorrow morning we have another firm come out? And let's face it, there's a lot of hedge funds that are down 50% plus for the year. And so, could you have a long-term capital management type of situation, which for your viewers don't remember, this is back in 1998 when you had the whole Russian bond default situation, et cetera. And then you had to have the world's biggest banks come to the rescue to save the financial markets. And, obviously people probably remember Lehman Brothers. And so that's sort of sitting in the back of my mind. And by the way, that's still a tail risk between now and the end of the year. On the positive side for tail risks, though, when I saw that statement from China saying they don't condone the use of nuclear weapons or something along that line, I'm like, aha. So their relationship with Russia does have limits. They're telling the Russians they don't want this to kind of continue, and Zelensky sounded better about a potential truce, let's call it. That's an upside tail risk. So for us, we're still playing this for a rally at least until sort of that December 13th next CPI print. And this could be a huge one, because you got to remember the biggest bear market rallies happen towards the end of bear markets. Even if you go back to Volcker, you had one 11% rally in the S&P, one 12% rally in the S&P before it went to its ultimate lows. Right. And that was towards the end. So we're pretty bullish between now and at least December 13th. You got to play it day by day, but that's how we're looking at it.